Silvergate. I wasn't going to do any more Silvergate, but I feel like this series needs an end cap. So I'm end capping it with this, whatever part this is. Silvergate, I lost a lot of money there. I wasn't wrong because of anything I extrapolated out of the data that I presented. My error was the interpretation of management signals. I discounted human nature's instinct for self-preservation. It's like a 401k plan that you've seen build up, over the years, and it gets more valuable until it's eventually worth like 100,000, 500,000, a million, some millions. This is where their stock options and stock holdings were valued, and they had taken a long time to get up to that level. They have to have, been bothered and upset and felt it wasn't fair, right? I mean, millions of dollars, you got that, that's your nest egg. It wasn't their salaries that was, most of these people's pay. It was the options, and you've watched it accumulate, and then it's just gone. And why is it gone? So this is, in their minds and in mine, frankly, they were never insolvent. They've proven that. They never went, FDIC never seized them. They paid off all their depositors. They were able to withstand the runs on their, on the accounts that forced them to sell treasuries at market, which was a discount to what they were booked in as. They lost at least $1.5 billion and still were able to pay off all depositors. Now, that's something that Silicon Valley Bank could not do. That's something that Signature Bank could not do, both seized by the FDIC. That's something that First Republic Bank, touted by many as an excellent example of how a bank should be run, even they could not withstand paying a situation where they had to sell equities at a loss to what they were booked in as at market value, take that mark-to-market money, pay off all their depositors. None of them were able to do that. Silvergate was. So whatever you think, whatever, blah, 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 I hear people out there like Chase Coleman saying that, these guys are crooks. The guy, Parrot Capital, that these guys are all crooks, they're evil, this, that, Marcohodes, and that's the mindset you've got to have if you don't want to think that you're, doing something evil. But the fact remains, no matter what you think of them, they're crooks, whatever, they were laundering money by, approving transfers of Bitcoin to South America. All your depositors, they all want their money right now. Can you pay them? Can you take, no bank is all liquid, so they have to take securities, they have to take illiquid assets and sell them and try to get enough capital to pay off all their depositors. How many banks out there could do that right now? I don't know that JP Morgan could do that. I haven't looked at JP Morgan, but I don't think there are very many banks that can do that. And Silvergate was in a position to do that. They did that, and they must have been very upset. Hat tip to Mark Hodes. Wow. That's amazing what you did. You went there with a white paper. You put it all in Signature. You put it all in Silvergate shorts, and you went around and you told people on Twitter, your crew, about it, what you were doing. They jumped on too. That started tanking the price. But it didn't become a groundswell. It didn't become an avalanche until Marco Hodes went to Washington, D.C., and took his white paper around and got the attention of Elizabeth Warren, who then made some public statements, including in conjunction with another senator, I forget who it was. They want all of the FTX records from Silvergate. By making this statement, and they want the DOJ to look into Silvergate's relationship with FTX. That was a direct result of Mark Hodes, and that result was a catalyst for the avalanche that followed. And so what are they thinking at Silvergate? You know, but that is what happened. So that's a series of events. And in spite of all that, they still, it wasn't true. They were not insolvent. They paid off their depositors. So that wasn't true. It's a falsehood that they were bordering on insolvency. It's a falsehood that they could not pay back their depositors, all the depositors. So why do they deserve this? Oh, because they were laundering money. No, they don't. You know how much J.P. Morgan launders every day? But at the time it's happening, someone wants to transfer money. It's their account. You know, who are you to say no? You know, unless that person on the other end receiving it has some kind of, you know, like that international police thing, the Interpol international police thing. What's that international police thing? Interpol. You know, unless Interpol has like a flag on them or something, how would all these banks know? In order to dig that, it's ridiculous what Cahotes was saying. And of course, he's going to say whatever he can. He saw an opportunity. FTX was associated with Silvergate. FTX isn't public, darn it. You know, can't sort them, but their bank is. So here's what I think happened. I think that when they began the process of liquidating, it's common knowledge that that Alan Lane, CEO of Silvergate, and Michael Saylor, CEO of MicroStrategy, are personal friends. Man, this sucks. I lost millions of dollars, and we didn't even do anything wrong. In fact, we're the best bank out there. Our management team is the only one that held stuff together. FDIC couldn't seize us. Look at all these other banks, you know, and they want to call us, you know, the bad management. And so Michael Saylor maybe cared for his friend and maybe even some of the people on the management team. Here's what we know. We know that Michael Saylor had a $205 million outstanding loan with Silvergate collateralized by Bitcoin, by 4 times as much Bitcoin as the loan amount, 800 million. If the loan was defaulted on, then that would have triggered a mechanism that would allow Silvergate to order the liquidation of those of that collateral in order to repay the loan. So why would they take a $40 million hit on the repayment of the loan? If it's collateralized by 4 times the amount, why would they have to take a single dollar hit? They could just sat there. First of all, they could have sold that loan to anybody. I think that Michael Saylor came up with a way, or maybe Alan Lane. Again, this is my speculation. I don't have proof of this. It just looks really weird. Why would they take a $40 million haircut on a loan that was collateralized 4 times, 400%? Why would you do that? I don't care if Michael Saylor's a friend. You know, it's not friend business, it's show business, right?
It's not show friends, it's show business.
I believe that what makes the most sense is that Michael Saylor gave $40 million on the back end, no idea how that would be structured, but to take care of his friend, Alan Lane, and probably, you know, at least the CTO, you know, Antonio Martino, and I'm sure, you know, I'm sure the whole team would have to be in on that, you know, and that's what happened. And I believe that that's why they went ahead and they didn't have to delist off the NYSE. They still had 4 months left to go on their extension. They came out with a press release, halted the trading of their stock, and said, NYSE, you have to delist us now. So over 4 months ahead of time, in advance from them being delisted because the extension would have run out, they came out with a press release alerting the public and the NYSE that they were going to be in violation once the extension ran out, and that they had no intention of complying with any of the conditions of the extension. Therefore, they need to be delisted right now. You know, and that the second that I read that press release, I knew First of all, I knew that I was extremely wrong about their intentions, and that in fact, not only were they not working in the interest of the shareholders, they were working against the shareholders. The shareholders were a conflict of interest for their actual interest. And now they're trading on OTCBB. They've dropped to 50 cents, a third or so of what they were at before they delisted. They've been as low as 2 cents. So they're a penny stock now, and they don't have to report anything at all. It's completely, they're a black box. It's a Schrodinger's cat in there. Is it alive? Is it dead? We don't know. It's a superposition. Silvergate is now a black box. There's no way to tell what's going on inside there. You can't hear anything. You can't see anything. You can't smell anything. It doesn't move. It's just what's going on in there. Superposition. That's what. If you're still holding, and while they're giving you the middle finger, all of them, every day, that's what they're doing to you. And you're still holding, bless your heart, bless your heart. And I hope it works out for you. I hope it does, but I don't, since it's a black box and nobody can see in, I don't see why they wouldn't just continue working in their own interests, which would be to strip that company of everything of value. They're going to be sued anyway, I'm sure, about, they've got 2 or 3 lawsuits against them right now for FTX and stuff. Why not add, you can add all this other stuff to the lawsuit, and I'm sure it will be, and they know that. About 3 or 4 years from now, what happens is these lawsuits wind along the court, they get stalled and stalled and stalled and stalled, and finally at some point, when everybody has forgotten about it, and it's finally being set for trial, then what happens is the 2 sides reach a settlement. And that settlement always pays the attorney fees for both sides. That's how the lawyers get paid, make sure that they get paid. If you owned Silvergate shares, then, if you want to be part of the class, the settlement class, you have to opt in. And if you don't opt in, then you'll have to sue them individually, and you won't be part of the settlement. And the settlement is that you get $5 discount coupon to Kentucky Fried Chicken. $5 off Kentucky Fried Chicken. We all eat Kentucky Fried Chicken from time to time. So you will spend that $5 at Kentucky Fried. And if you don't have this coupon on you, that's $5 you'll spend out of your pocket that you could have used this coupon for had you just become part of the class. And that's what they're going to do. I won't make the mistake again of naively assuming that any company is working in the interest of millions of anonymous shareholders that they don't have any particular knowledge or affinity of. So of course they're going to do what's in their interest. If they're holding a bunch of shares in a company, prospect of growing it back to a level again, equitable value for those, which in their minds had to be at least 25, maybe as high as $50 a share, that seems impossible. And so that ended that incentive. So that wasn't what I assumed was a given, which is that they hold a bunch of stock in the company. It's in their interest to grow the share price, unless you have another way to take that company and cash out. They ran a crypto exchange, within minutes, Michael Saylor could have had that, in Dogecoin, and Elon Musk, as an intermediary, and sent it to, Silvergate management. I think that sometimes I get too scripted, and sometimes I don't see things clearly because I want everything scripted, and I take out the human factor. I remove that human factor for myself or others. That's when I miss human nature, and that's what I missed. And I'm not going to make that mistake again, like I said. So this was just me being human. So I think that's what happened. If that's not what happened, something funky happened.